it goes. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year.
Monday, everybody! What's up? Good morning. Welcome to the morning show here on Stock Market TV, the best morning show in finance. I'm Spencer Israel, joined as always by JC Parets. Steve Straza, in case you're wondering, still in Asia. Is he ever coming home? The answer is yes. Allegedly, he's coming home this week. Will he? Won't he? We'll find out. On today's show, Andrew O'Connell is our guest from Pristine Capital. We'll be glad to talk to him in a half hour. I'm sure he has good charts for us. He always does. In the meantime, we need to talk about energy. That's the question we're asking today. Should we be buying energy? No one seems to like the energy sector right now, and that makes us interested. So we'll talk about that. We have some earnings on our radar. Domino's, Chevron pre-reported they were not on the calendar. They said, screw it. We're going anyway. So I want to hit that. I do want to hit AMC only because of what happened on Friday was very interesting. And the stock you might see is up 50% this morning, but is already getting back half its gains from Friday evening. So we'll talk about that. Kimmy Sokoloff will be on the show as always. I see you guys in the chat. Good morning. Drop me a like. Hit that thumbs up. Let's roll. What's up,
Mr. Israel? Happy Monday. I gotta tell you, I talked to some of my high school friends, some of my college friends that hate their jobs, and they're like, "Oh, tomorrow's Monday." I'm like, "Fuck yeah, man! Tomorrow's Monday. Let's go." Futures open at 6. I'm usually at my in-laws' house a lot on Sundays. There's like a Sunday dinner and everything like that. So I'm usually with my wife's grandfather and everything like that. And he's a little bit of a DL junkie. Like, he's in his mid-80s, and he's always like, "Hey, JC, when are futures opening up, huh?" I'm like, 45 minutes. Let's go. I got my wife's entire family all junked up on Sunday futures opens.
That cannot be healthy.
Well, I mean, think about it. For years and years now, like, I've been with my wife almost 10 years.
Yeah.
When we were boyfriend and girlfriend and everything, and like literally on command every Sunday, I'm kind of anticipating the futures open. Like, that's just like, not that I'm going to do anything about it, but it's just sheer curiosity. Aren't you curious of the score of the game if you're not watching it? Like, if you get dragged to like a little birthday party and there's a game going on that you're really interested in knowing what the score is,
The only times I really look at the Sunday futures are when like something big happened over the weekend and I just got to know, right? I just have to know. But on like a run-of-the-mill July Sunday, I'm not going to check the futures on Sunday night. But if there is some big global event, some big terrorist attack somewhere or something big on the macro front, then yeah, I'm checking the Sunday futures. Normally though, I'm content to wake up on Monday morning and check the score.
Sounds to me, Spencer, like you're a fair-weathered fan. I'm there every Sunday. Every Sunday.
Maybe that makes me a fair-weather fan of the market. But hey, I like the pre-market session more than you, I think. In terms of like the pre-market price action, I find that to be fascinating.
Yeah. There's a lot of opportunities in the pre-market, no question. It's less liquid.
Yeah.
It's not for me. Maybe it will one day. Right now, it's not for me.
All right. Fair enough. All right. Central question of today's show: should we be buying energy? Let's get to it in state of the markets. Let's ask that question and maybe answer it.
Well, I think we could just start there with chart number 1. I think that's going to do it. Come on, guys. Do you guys think that the energy could dominate the second half? I think it could. I really think it could.
Well, what's notable is we've asked a few of our guests now, what do you think is going to lead in the second half of the year? And a couple of them have said energy in the top 3, right? A couple of them, I forget. I
feel like I got to press them, and they're not really too sure about it. And just generally speaking, if you want to jump down to slide 6 quickly before we get back to crude oil, This just shows you, this is the fund manager survey. And they're talking about how people just gave up on the commodities trade, right? Fund managers they're just as bearish today as when crude oil futures were trading below zero. That was the last time they were this bearish. And if you recall, when crude oil was trading below zero, it didn't last long, and crude oil absolutely ripped. If you bought oil at all or energy stocks, you did really, really, really well. We're in one of those situations now, like from an extreme price standpoint, like crude oil futures aren't in the negative, but they've essentially been dead for quite some time. Why don't you throw the crude oil? Because when we talk about commodities, energy represents a third of the entire CRB index. So, big weighting in commodities, obviously. And then here's crude oil. And, for me, this is just classic technical analysis. You got those former highs in 2018, tested them again after COVID, broke out. Oil went to 130. I remember it well. It was a Sunday night. Futures, actually. I remember being in my mother-in-law's living room and telling my wife's grandfather, yo, oil futures are at 130 tonight, right? And that was the top, right? That Sunday night futures session was actually the top, which is hilarious now that we're just talking about that. And oil essentially got cut in half from there. Yep. But I will say, just generally speaking, the resiliency that we've seen in energy stocks in general, despite a 40-50% correction in crude oil, like, how does that not stand out to you, Spencer? Does that not impress you? Are you not entertained?
I'm entertained. Yes.
I feel like you're not, though. I feel like you're just saying that to appease me.
No. You posited this question late last week, about energy and you're right that it doesn't get a lot of love. That in and of itself makes me interested.
Take a look at the energy sector. The next chart, slide 2 here.
I feel like I'm a natural contrarian by default. I love being a contrarian. So,
well, that's usually a bad idea. Right.
Well, just a contrarian of ideas, not necessarily, with my investments or my trades, but just
you're not a contrarian. You're a cynic. You're cynical.
I'm definitely a glass half empty person. Yeah, no doubt about that.
Yeah. You're a cynic, and there's nothing wrong with being a cynic. But if you're a cynic at all time, that just makes you an asshole.
Yeah, right? That's true.
Well, by the way, that's to quote the great Jeff DeGraff. That's a Jeff DeGraff quote right there. All right. So here are energy stocks. And energy stocks are still below their 2008 highs, Spencer. What were you doing in 2008? Junior high prom?
That was my junior year of high school.
All right, so you're a little older. All right.
Yeah.
Nevertheless, I remember it well. The entire stock market was crashing, except for energy and some agricultural stocks like Mosaic and Potash and stuff like that.
Or it depends on the calendar, or it could have been my senior year.
This is summer 08.
All right, summer before my senior year.
All right. That must have been a hell of a summer there.
It was good times. Good times.
Yeah. Energy hasn't even broken out yet. It hasn't even broken out yet, and nobody cares. And there's a reason, Spencer. I'll rip on you all day long, but there's a good reason why you don't care about energy. Because
my entire life I haven't had a need to.
That's right. You shouldn't have to care. That's right. That's exactly right. Well-deserved, not giving a damn about energy. And even today, energy still represents only 4% of the S&P 500. 4%. So energy stocks could double, triple, won't matter at all to the indexes specifically. And by the way, you know what it represents of the NASDAQ 100? Represents 0% of the NASDAQ 100. So energy is just not people don't own energy. Americans certainly don't. You look at some other countries that have much more energy exposure, they'll have, but nothing relevant. Americans just don't own energy, and they don't want to own energy. Like, that just sounds like a great time to be buying energy. Nobody owns it. Nobody wants to own it. I'm interested. In fact, I am buying it. I bought more Chevron last week, and I'm really considering adding to that position today. And you know why I'm considering doing that is because we want to add to winning trades, Spencer. Only losers average down losers, you see. So for me, a trade that is working, nobody wants it, nobody owns it. I like it. I'm really into this. And, when we talk about like a stock pickers market in the second half of the year, when they talk about a stock pickers market, generally it's just something people say. But I think that this second half is truly that. We could be in a scenario where You get some profit taking, rotation out of that growth tech trade that did so well in the first half of the year, that did terribly in the second half of last year, by the way. So it was just the first 6 months of this year, and we've already started to see some rotation out of those names and into some other areas, like financials, for example. Some crisis that was. So that's what I'm looking at here, and I think Ian Cully, shout out Ian Cully. He says that the chart of the second half is this one, and I'm not going to disagree. I'm really not going to disagree. This is energy versus technology. And if there was ever a time for energy stocks to start to outperform tech, this would be a perfectly logical area. And shout out to Mark Zerby on the chat, talking about OIH. For you old timers, and not Spencer, who was in diapers in the last energy bull run, but for the rest of you who were around, and ever since then, oil services have been the worst place to be in energy. Energy has been bad in and of itself. Oil services, the worst of the worst. But the relative strength that we have seen in oil services for quite some time now is very, very impressive. So good shout out there, Mark Zerby. Very, very impressive on the oil services. I would look to some of those offshore drillers like Noble. For example, these things have absolutely been ripping. Diamond Offshore, absolutely been ripping. Take a look at the not a top there in slide 4. My favorite kind of topping pattern, for those of you guys who've been following around for some time. Did we do a state of the markets bumper? Did we do it?
Yes, we did it.
All right. Am I just getting caught up here?
Yeah.
Favorite topping pattern, guys, is the topping pattern that is not a top. Right? Because we know that asset prices trend. We know that. So generally, when you see a topping pattern, it's usually not that. It's usually a consolidation. In this case, probably a consolidation, and we're in the lower end of the range. Great buying opportunity, and we're taking advantage of that. So, come the holidays, Thanksgiving, my favorite holiday, Spencer, Thanksgiving. What's your favorite holiday? Valentine's Day?
Probably Thanksgiving.
Thanksgiving, favorite holiday. All right.
Probably. Yep.
All right. I love it. I have a lot to be thankful for personally. And I just love everything about Thanksgiving. I like pairing with a nice French Pinot Noir and some turkey and all the fixins.
Yes.
It makes the best pumpkin pie ever. Anyway, when we're sitting here, and the Dolphins are beating the Jets that Friday after Thanksgiving in New Jersey, I'm going to be thinking, have I been positioned properly? Because this is the things that I'm thinking about during a football game. Have I been positioned properly for the second half of the year? And I think that I'm going to be like, damn, I didn't own enough energy. And I'm going to have owned a bunch of energy, and I'm still going to think I didn't own enough. So just imagine the feeling of investors that are going to be like, holy shit, I didn't own any energy, right? So here's JC bitching he didn't own enough, and I did own a bunch, and people that own none of it. And if you own the S&P 500, I have a funny feeling the S&P could be maybe around here, around Thanksgiving, right around these prices. It wouldn't surprise me one bit, Spencer Israel. But that doesn't mean that there won't be huge winners underneath the surface. And energy is just a great example of a sector of the market that could be ripping, and it's not going to make a dent in the old market return.
Yeah, so it will be like if you don't look under the surface, you'll never see it, right?
Like if you're one of these yahoos who's just always look as slave to the indexes, because there's people that are just so lazy that they just or don't have the time to actually look at the stock market, and they think that the S&P 500 is the stock market. Like those people are the ones that are going to get hurt the most, right? And maybe not hurt the most, but those are the ones that are going to win the least. Sure.
So what's the move here exactly?
I mean, listen, you could chase some of these oil services. If energy rips, oil rips, these things are probably going to do great, right? Let's keep that in mind. I like the Chevron. This is a long-term trend, long-time darling for all-star charts readers. We did very, very well with this off that initial move last year, over the last couple of years, really. And then take a look at a short-term chart. I started buying this one against 150. Here we are at 160. So that worked out pretty well as a good entry point. And if we start breaking out with the NASDAQ down last week, Chevron was up every single day. 1, 2, 3, 4. No, sorry, that's not right. 1, 2, 3, 4. For the last 4 days, Tuesday through Friday, it was up every single day. Very strong. I bought more last week. I would be shocked if I didn't buy more today. I probably will. I might even double my position. That's how I feel about this one. I got a little bit of P&L in there. I might be doubling down on my position here. I got the January calls. I got the 170s. I got the January 170 calls. I'm thinking about doubling my position. I already have a decent sized position for the record, so it's not like I'm and not to mention I have all that cash because I got out of everything cryptocurrencies, if you recall, which is working out pretty well there, Mr. Spencer.
JC, I've also got some cash that I never really redeployed when I did some tax loss stuff at the end of the year. So you're piquing my interest here. You're piquing my interest. I've been wondering what to do with it. So
look at this Bitcoin breaking down hard, down 1,000 points today. I love to see it because I don't own any of it. And, I don't own any Mara, and it's getting the shit kicked out of it this morning. Great. I hope it goes to zero, right? So all of these things that I don't own are getting killed, and that's fantastic, right? I feel like, because if these things would be ribbing, and I'm like, oh my God, do I buy the Mara back? Do I buy the Bitcoin? Do I buy more energy? Very confusing. I don't have to worry about that because I have no interest in buying Bitcoin until we're above 31, and we're at 29, so we're nowhere near that. And I have no interest in owning Mara at all, unless it's above 20, and we're nowhere near that. So I don't have to worry about my crypto exposure or lack thereof at all. While everybody's focusing on that and technology, and now everyone's gung-ho on tech stocks and all this stuff, you can have it. You can have it. I'm looking elsewhere. Energy's got my attention. I really like this Chevron if we're above 150. Quickly, and I wanted to touch on sentiment, but go ahead.
No, I was going to say, since you mentioned Chevron, can I at least give the news on Chevron this morning?
Oh, is there news?
Yeah, they were not on the earnings calendar, and they said, "Screw it, we're so excited, we're gonna report earnings anyway." So they pre-reported earnings per share and revenue above estimates. They produced 772,000 of barrels of oil equivalent at the Permian Basin, and then fun little quirk about Chevron: they've had this mandatory retirement age of 65 for all their executives. It's like a corporate thing. Their CFO is retiring. Their CEO, though, for him, they're waiving the rule. So their CEO is allowed to stay on beyond the age of, he's 63 right now, but they're waiving the mandatory retirement age for him when he turns 65 in 2 years. I guess they're so happy with him. But anyway, so pre-report, and it was good. And that's why the stock, if you look at it this morning, at least last I checked, yeah, it is trading higher. So
I want to just show one more chart here because we talk a lot about Exxon here, but another really interesting one is we talk a lot about Chevron here, but another really interesting one is Exxon Mobil here on slide 1. Throw that one up there. This is the largest component of the XLE, which is the Energy Sector Index Fund. Exxon represents 23% almost of the XLE. Chevron represents 19% of the XLE, so over 40%, just those two. So the blue line there is the XLE, that's the energy sector, and then the candlesticks there are Exxon Mobil making new all-time highs. Frida wants to know, JC, are you in the options with Chevron? You bet I am. If you missed it, I'm in the 170s, January 170 calls. I added to I doubled that position last week, and I'm thinking about doubling the entire position, so that would be quadruple my initial position. So that's how I look at it. NASDAQ Poppy wondering about Oxy. Listen, if Chevron's going, if energy's going, Oxy's probably going too. Uncle Warren's been all over this thing. I listen, if they go, they're all probably gonna go. Some people are looking for maybe smaller cap names in energy, looking for that juice. I can get the juice in the options market with a blue chip, with a mega cap, right? So I could still get that juice. Not that there's a wrong or right or wrong way to do it. Like you could be in an offshore driller and have the juice. You could be in options in the offshore driller and get double the juice. Like there's a lot of different ways to do it. But I think generally speaking, as investors, I think it's prudent this summer to think about our energy positions for most investors, the lack thereof, right?
I got a question for you. Could we get more juice on this trade by simultaneously shorting like an ESG ETF?
I mean,
No.
I think you're just getting cute at that point.
I am.
You know what I mean?
I am getting a little
I
cute.
think you're getting cute, you know?
All right. Yeah.
Right? First and goal at the 1 yard line, and you got Derrick Henry back there. Just give him the ball.
Yeah. No.
Like, you're gonna get cute. You're gonna run a flea flicker. You know?
I'm gonna run a double reverse. Yeah, that's what we're gonna do.
Give Derrick Henry the ball and just let him plow through everybody. Like, just keep it simple, stupid. That's how I look at it.
Chat agrees with you. I've had a survey running for the past few minutes here on the YouTube chat. How do you feel about energy for the rest of the year? I asked. Bullish, bearish, neutral, or don't know. More than half of respondents, 56%, are bullish energy for the rest of the year.
They're watching the show, though. They're biased. They're like,
okay, fine. Then credit to the 4% who are bearish. Credit to the 25% who are neutral, or the 16% who say they don't know.
That's right. Can we I want to touch on sentiment quickly before we move on. I got 3 sentiment charts. Very, very interesting. Investors are just still so scared. Like, what do you think they're so scared about, Spencer?
Are you kidding me? They're scared of a repeat of last.
I am not kidding.
They lived through last year. They think that they have there's PTSD from last year. That's what they're scared of.
Got it. So you think that they just can't get over, humans are just too ignorant and stubborn to get over their recency bias?
Of course.
All right. That's fair. Largest position from fund managers is cash. Most underweight is equities. Okay. We're off to the best start to the NASDAQ ever. And okay. Biggest underweight, and then it's clear who they're listening to. Go to slide 12 there quickly. It's quite obvious who these fund managers are listening to. They're listening to sell-side analysts. You figured by now they would learn, stop listening to these fools. Like, that's not, you don't win in this game by listening to sell-side. Quite the opposite, actually. Yeah. When the sell-side's at consensus, you take the exact opposite side. And after the best first half to the NASDAQ in history, how does Wall Street sell side respond? Only with their most bearish second half outlook ever. Wow. Very aggressively bearish sell side analyst. And then JP Morgan, of course, asking investors, are you more likely to increase or decrease your equity exposure over the coming days and weeks?
Oh,
as it turns out, nobody wants to increase their equity exposure. And usually when nobody wants to increase their equity exposure, is that usually the time to increase your equity exposure? I believe it is. I'm very observant, Spencer. I don't know if you realize this, but I'm very good at observing.
You are so humble. You're the humblest person I know.
I don't know about all that, but I do give myself credit when it comes to observation. I observe, you know. Right. I watch, I digest, I consume, Spencer. And I've been at this game, I've been at the trading game, for over a couple of decades now. But in terms of, understanding sentiment, being on Twitter every day for 15 years, like, these newcomers telling me how I should act. You're like, listen, we built this before when you were in diapers, buddy. Telling me how to act. I tell you how to act.
As of today, you will never be on Twitter again.
Oh, yeah. The X. This is the dumbest thing ever. Come on. Really, X?
X going to give it to you. I mean, that's what else is there? What else is there to say? What else is there to say about it? Anyway, okay. Yeah. I think you got the chat excited. You definitely got me excited. I'm definitely going to do some research today.
Have you ever been this excited about energy stocks in your entire life, Spencer Israel?
I mean, excited, no. Interested, yeah. I mean, I've been interested in energy. Like when oil went negative, that was interesting. So, but I've never bought. No, that's not true. I have bought energy stocks. But I don't own any energy right now. Right, I own basically none. I own.
You haven't been watching the show, the morning show.
The only energy that I own is whatever is in the S&P 500, which is
got it. So nothing.
So nothing. Yeah, nothing. So that's what. So anyway, my takeaway was after this, after we're done here, I'm going to hop on my favorite ETF research website, which I profiled on lunch on Friday, and do some looking into some energy ETFs for myself. Okay, 8:56 here. Let's do some earnings before we bring on our guest Andrew O'Connell. from Pristine Capital, because we do have a couple. We already did one with the Chevron, but they like jumped the gun on us. So let's actually get to the calendar and do the one that was scheduled this morning. And we'll do that right now. Where's my bumper? Domino's Pizza, the best of the worst is what I always say. The best of the worst kind of pizza. Their earnings was good, at least on the bottom line, earnings per share. Top line came in a smidgen, just a smidgen below estimates there. What do they say as far as same store sales? They said, have it up here. Same store sales growth, basically flat, up 0.1%. International same store sales up 3.5%, looking a little better on that front. They did open almost 200 new stores in the quarter. I guess there's more demand for Domino's than we thought, JC. Anyway, you can see the chart up on the screen. The stock is volatile this morning, was down right off the report, but has turned green here. The initial reaction negative, now positive. Look at that chart, though. What say you?
You hear me say it all the time, Spencer. My favorite kind of topping patterns are the ones that are not a top at all, but actually just a consolidation with an ongoing uptrend. You know, I mean, this to me looks like what we were just talking about. You know, down near support, not a top. That's what this looks like to me. You know, when we looked at that energy technology ratio, it looks a lot like this, right? And we're down near support, and now this thing is getting going. So, one is shitty pizza, and the other one is a ratio between energy stocks and technology stocks, but the patterns are very similar, right? And that's just really how the market behaves. So I think that's probably a good lesson here. And listen, just because the pizza's terrible doesn't mean that the stock can't go up. Like, products and companies and the stock are two completely different things, So, and a lot of people forget that. They're like, oh, buy companies with good fundamentals. Like, I've never heard worse advice, right? Like, that's a terrible advice. That's not how to make money in the market. It's a great way to lose money, actually. Domino's Pizza. Don't eat there. That looks good.
My favorite thing, I don't know if this is quite a fundamental analysis thing, but narratives, right? Just fundamental, because the technical narratives are all price driven, right? But fundamental narratives can go totally off the wall on you. Domino's had probably my favorite fundamental narrative of any company about 5 or so years ago. If you Google, just go to Google and Google Domino's is a tech company, you will get, I don't know, 100 articles from around 2017, 2018, 2019 about how Domino's Pizza is actually a tech company because, first of all, their stock for a while there did trade at a tech-like multiple for whatever reason or another, but also because they seem to have, I guess, a lot of technology employees doing, I don't know, building their app or whatever. I have no idea. But there's a whole narrative being spun that Domino's is not a pizza company. They're a tech company, ladies and gentlemen. I never believed that for a second. I don't think JC believes that.
Well, if you've eaten their pizza, you know they ain't a pizza company.
But I always thought it was just the silliest example of narrative spinning, because, come on, don't tell me that Domino's Pizza is a technology company. But if you Google that phrase, you'll get a shocking number of articles trying to convince you otherwise. Anyway.
Well, as long as the journalist thinks so, then it must be true.
Let's see. Just to name a few. Forbes wrote about it. Restaurant Business Magazine, Axios, Business Insider, Fast Company, whatever. Anyway.
It's considered a restaurant. Also a strong word. Did you know, Spencer Israel, that Domino's Pizza is headquartered in Ann Arbor, Michigan? I had no idea.
For whatever reason, there are like 4 at regional / national pizza chains headquartered in Michigan.
Really?
Little Caesars is in Detroit, Ann Arbor is Domino's in Ann Arbor. There's a few Midwestern ones as well that are also in Michigan. I'm not really sure why.
Is it one of their arenas or something called Little Caesars?
Yep, the downtown basketball hockey arena. Yep.
See? Come on.
There you go.
Who knows?
There you go. All right, let's bring on today's featured guest, Andrew O'Connell, Pristine Capital. He's here. Let's get him on the show.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. O'Connell, welcome.
What's going on, guys? Thanks for having me on the show.
Andrew, what's happening? I'm glad you're here. What's going on?
Not much, man. Just listening to this conversation about the energy stocks. I bought some Occidental last week, so excited to talk about it.
All right. Someone's on board. So what are you thinking? You thinking that energy can actually make a move in the second half and catch a lot of investors off guard?
I believe so, and it goes back to that chart that you were sharing about the investor positioning and how for the last year, these investors have pretty much been dumping their energy stocks, and we're seeing technology, which has really had a fantastic move with that AI theme. And now we are seeing commodities, which are coming off the lows. And this is coming at a time when investors are basically celebrating, like, oh, inflation is over. Everything is all good now.
Right.
And really, over the last 2 weeks, we're seeing commodities across the board that are moving to the upside. And the other significant theme as well is the Black Sea grain deal with Russia. That did not go through maybe last week or 2 weeks ago.
Why don't you explain that to people who don't know? Because I definitely know what you're talking about. But let's for other people who don't know.
Yeah, sure. So basically, the short story with that Black Sea grain deal was last July, there was basically an agreement that was made with Russia that, hey, there are these big food shortages across the world. How about let's all play nice and we'll make sure that there's a safe corridor where we can export these key materials, grains, etc. That way we can alleviate these shortages. And as soon as that deal passed, we saw commodity prices really start to move to the downside. As of maybe last week or 2 weeks ago, the Russians said, hey, we're not going to renew that deal. Ever since then, we started to see these commodity prices move to the upside.
So you're buying Oxy. So obviously your oil and gas sort of is where your head is at. What about some other commodities? Anything in the base metals, maybe precious metals or some ags? Anything else got your attention?
So the other one that I absolutely love, and we can pull up the chart for this one, is gold.
Yeah.
If you look at the GLD ETF and you go to the monthly chart, this would be a trade that's more for like an intermediate to longer term swing trader. If you look at the daily chart of gold, it doesn't look so great. We just broke out of a downtrend, but if you zoom out to the weekly chart, it looks fantastic. And if you zoom out to the monthly chart, we've been in basically like a 10-year consolidation, and we're nearing the upper end of that band. So I think gold looks very good. Uranium stocks as well. If you pull up CCJ,
Yep.
that name, if you go to the weekly chart, we're trading very, very close to those highs. So I think this is something where, like you said, investors really are not expecting a big move out of the commodity
Hold on, let's throw up the
space.
chart. Hold on, Spencer. Can you throw up slide 1 there for gold? There you go.
Yeah, go ahead.
Well, that's what he's talking about there, and you can even do one of these guys here. Let me drop this in quickly. So this is what you're referencing there, Spencer? Throw in there slide 2 there, so you could kind of maybe as an homage to William O'Neill, maybe like a cup and handle sort of situation we got going there.
Oh yeah, exactly. So that's what we're seeing on the weekly and monthly time frames. So for me, as like someone that trades the markets, it's like, okay, if you're going to get long gold, where do you buy it?
Right.
You could certainly say, hey, I'm buying it above 2000. If we clear those upper wicks, we've tested those upper wicks maybe 4 or 5 times now. You could certainly wait, maybe we clear that level. But for me, we have this basically a pretty shallow pullback on the weekly or monthly chart. So this is really where I'm accumulating gold and looking maybe the next 3 to 6 months for this chart to break out.
You can even argue, that 1800 level, which are those monthly closing prices from 2011. You can even, it's all about pick your poison. It's all about depends on what your time horizon is. It's messy here short term, bigger picture. I mean, I'm not going to argue with you. Looks great. Huge base. Bigger the base, the higher in space is how I learned it. Why don't we talk about some upside targets? What do you think? 3,000 easy, right?
Yeah. So I think on the upside, you can look up to that 2,300 level, the 2,600 level. I think those are good upside targets to watch. But to be honest, I think it's really about stop placement. And from these specific levels, if you're to purchase gold here, you can set a really tight stop. Typically, what I look for on my trades is basically like a 2 times risk multiple. So if I'm risking 4%, I'm looking to make 8% on my trade. So this is the kind of trade where you might take the trade, maybe set a 4% stop. If you get to 8%, you can take a target, but you know that there's this bigger macro trend behind you. So you can potentially let this one just sit out and see what it does if it has a bigger move. So that's kind of the way that I think about it. Try to set as tight a stop as possible. If you end up hitting your target, given this chart, you could have some really nice upside. It's almost like an upside call option.
Any specific names that you like in the gold space? Because if gold's going to move, you're going to get the better bang for your buck in the miners, right? Historically speaking, any names that stand out to you?
To be honest, I think those gold miners, the core.
Oh, did we lose Andrew? Oh, we lost Andrew.
Wait a minute. We didn't lose him. He's still here. But
he's frozen. We lost him. Well, I'm not going to disagree with anything he said. He's buying energy stocks. So am I. He's looking to put exposure on gold. He's looking at this big base. I don't disagree with that at all either. We should have some guests here that I can disagree more with. That's way more fun.
We can try to. Yeah, we can. Oh wait, I think he's back. We're back.
Can we get one of these angry permabears in here? I'll disagree with them all day.
No, we're back.
Andrew, you back? Are we back?
Yeah, I'm here. If you guys can hear me,
we can. I was just kind of singing your praises. How unfortunately I don't disagree with anything you're saying, and how it's way more fun usually if we do disagree. So you're kind of talking my book here.
Yeah, so I think we're starting to see a couple of these groups set up where, like, you can see the energy stocks and crude oil, they're starting to make a move. You can see gold looks like it's set up on the longer term time frames. CCJ as well in the uranium space is starting to set up. And then that chart that you shared earlier with the investor positioning is just showing that, investors really are not ready for this move. So I think if you're looking to play these trends, you could always enter when like all of this stuff has broken out and the financial media is talking about it and everyone's going crazy. No. Or you can just enter here and have a very similar stop placement, perhaps an even better risk reward, and you can see if it happens. That's what I'm doing here.
What about natural gas?
Nat gas is another one. To be honest, I think that's more of like a speculative trade. It's just been basing for so long, and the price
as opposed to the conservative nature of the crude oil trade.
Yeah, because crude oil, like you can see the charts already moving. Nat gas, I mean, it had a really good move last week. So yeah, perhaps there's even more bang for your buck in nat gas.
This thing's been basing all year.
Yeah, so that's another one. It would shock the world if nat gas had a move here. So yeah, these are all very interesting. I mean, right now, a lot of investors, they're looking at the AI theme. And we saw last week something that was really interesting. One of the big heavyweights in that space, ASML, they reported a beat and raise quarter, and the stock finished down on the session. It's down maybe like 10 to 15% since that earnings report. So to me, that really speaks to the investor positioning in that group where you got a beat and raise quarter and the stock is not going up.
Yeah.
So it's
after a huge move, you can't go up on good news. That's a sign. Just like, after a huge move to the downside, they can't go down on bad news is usually a sign. It's a great call out there. ASML, we call it the Dutch master out here, and a huge company. One of the reasons that the Netherlands has, been such a huge outperformer for sure. Not to mention, some of its other exposure, non-tech as well, that we're seeing out in Europe. But nevertheless, great call out there. Not able to resume its uptrend on good news after a major move. I couldn't agree more. Let's get off the commodities conversation for a minute. Why don't we talk about some of these other areas like AI, like semiconductors? If we're going to get energy leadership in the back half of the year and some digestion, well-deserved digestion in technology and growth, you're going to see a market where the indexes are making little to no progress, maybe even going down, but underneath the surface, you're going to see some huge winners, right?
For sure. And the thing with a lot of these semiconductor stocks is they generate so much cash. Like these definitely are the best companies in the market, but it's just a situation where investors, they're very long these names. So they're definitely names that I'm not taking them off my screen, even if they have pullbacks, even if they have corrections. There's a lot of these stocks that they've made moves to the upside where I'm looking at those names potentially saying, hey, if this stock retests the 50-day simple moving average, perhaps that's where I'd be interested in the name, because these really are very dominant companies. Like a lot of them, they have a free cash flow margin of over 30%. It's pretty bonkers stuff. And I think that's the reason why these names have moved to the upside so much. But it's just a bit of a crowded trade at this point. So, you get to that point where retail's piled into these stocks and you can get some pretty violent shakeouts that maybe go a little bit deeper than investors are expecting.
What about healthcare? While technology and growth gets a lot of love, healthcare is the second largest component of the S&P 500, second largest component of the Dow Jones Industrial Average as well. Could we see a scenario where, as money's coming out of tech, you could see healthcare as one of the leaders there as well?
Yeah, and we're already seeing that in the XLV ETF. It has a nice, really wide base. And what I think is great about that sector is it has some growth characteristics, but then it also has some really defensive characteristics as well. So if you look at a stock like Eli Lilly, ticker symbol LLY,
Yeah.
that's a name that's clearly a market leader. Fundamentals are amazing. It's another one where the trend is just kind of exhausted to the upside. So I saw a lot of these healthcare stocks moving to the upside last week, but it was names like Johnson and Johnson, which don't really have like those incredible growth characteristics. The biotech group really wasn't that strong.
No.
So it looks like investors, they're just going to the more like defensive names within healthcare. And it's been a really sharp move in that space. That's what's tough. That healthcare move happened in just a few days. And it makes it tough, but that's another group I'm watching as well. Another really good group.
I'm interested in the medical devices. Take a look at this AbbVie, ABBV. Take a look at that. ABBV, AbbVie. I started buying this last week. Looking to add to positions on AbbVie. There it is on slide 2. Throw that one up there, Spencer. This is the one that I started buying last week. This one looks good.
I'll get it. 1 second.
There it is.
There we go.
So see, right, we've been talking about, Andrew, we've been talking about these topping patterns that don't end up being topping patterns. They're actually just consolidations within an ongoing uptrends. I didn't draw a giant frowny face on top of this one. I could have and been like, this could be potentially a monster top, double top, rounding top, whatever you want to call it. Or we could just be at the lower end of a range within an ongoing uptrend. And that's the bet that I started to make last week, looking to add to positions because it's working. And one lesson that, people have told me 1,000 times over again, only losers average down losers, add to winning positions. Don't water your weeds and cut down your flowers. The idea is to do the opposite. Water your flowers, cut down your weeds. And, it took me a long time of watering my weeds and cutting my flowers to finally understand how stupid that was. And, I've learned over the years that we want to be adding to winning positions, get out of your losing positions. Something like Chevron, looking to add to Chevron this week. Something like AbbVie, looking to add to AbbVie this week. I'm really interested in these medical devices, not to mention technology and medical equipment historically, really move together because these medical device stocks, they're robots that are performing surgery. Like, they're healthcare stocks technically, but they're technology stocks. But the divergence that we've seen away from that, where the medical equipment has just not been able to keep up with technology in general, perhaps a catch-up trade there is coming here in the back half of the year. That's the bet that I'm making.
Yeah, certainly. And those names, they all have super strong fundamentals. And really, even that chart that you shared, it's just like a very long consolidation pattern. And you can see those long lower wicks every time it tries to break the range. So there are definitely investors that they're accumulating that stock. Those names, a lot of the big blue chip companies within that space. I think what has me a little bit hesitant there is the market has been so red hot. And those names, they're not exactly making new highs. I think
medical devices did close at new 52-week highs this week.
Oh, okay. Medical devices maybe a little bit different.
Yeah, but look at healthcare in general there, slide 1. Just so you can see, to Andrew's point, what he's talking about. Just no progress at all. But I'll give you this. You're right that it hasn't made progress. It hasn't been participating to the upside. But it never broke down in the last bear market. It never participated to the downside. Right?
Yeah,
now flip that on its head. That's impressive.
Yeah, now we have that long, wide base. And then the other thing as well, like if we start to get the economic slowdown investors have been worrying about the entire year, if that comes, let's say in the next 6 months, healthcare is a really good defensive group that a lot of investors go to. And we're starting to see the price action really shaping up in this. And it's really just been in 2 weeks where we've made some really nice upside progress. So this is another chart where it's not on every investor's radar yet. But yeah, it's got that long, wide weekly base. So
And it's a big component of the indexes, like something like energy. And these energy stocks could double from here, and it's going to make zero impact on the market. But healthcare is what, 20% of the Dow Jones Industrial Average, which is the second largest component, and it's 14% of the S&P 500, second largest component. So healthcare actually is meaningful.
yeah, and if investors, we have a bunch of big mega cap tech earnings this week. If investors go, hey, let me take a couple chips off on these mega cap tech stocks, I've done so well in these, that healthcare group is pretty much right there. And we've got that long weekly base. That is an interesting group.
All right, Andrew, we're going to let you run. Guys, Andrew O'Connell runs a great Substack. The link to that is in the description on Twitter or on YouTube. And also the link to his Twitter is there as well. Andrew, have a good one, man.
Andrew, this is great. Come back soon. Thank you.
Definitely. Thanks, JC. Thanks, Spencer. Talk soon.
All right.
Adios.
That was good stuff. I enjoyed that. I enjoyed that conversation. I
feel like him and Straza would be besties.
Perhaps. Yep. Okay. Let's go to Kimmy Sokoloff. We always bring her on at this time to see what she's trading or what she traded the prior day and what she's has her eyes on this morning.
By the way, great. Ashish makes a great point. ABBV is a drug manufacturer. It's not. It's a spinoff from the medical devices. Abbott Labs.
Abbott. ABT is the device.
Great call.
Yeah.
Great call.
Yep. Okay.
Kimmy.
Hey guys. Morning.
Oh,
what's up,
Kimmy? Just another day. Just crushing it, taking names. It must be nice. Must be nice. There's people out there who are not able to make money trading in the market. You know that, right?
Yeah, it's not for everybody. That's why most people should not day trade.
I hope you recognize, your good fortune. I'm not going to say it's luck because you earned this. You put yourself in a position to be successful. We're looking at Friday's trades. Made money in Rivian from the long side, Procter & Gamble from the long side, Tesla from the long side. Only one loser in the snow. But great example. We're looking at Tesla, Rivian, Procter & Gamble, and a Steel Dynamics trade. Just very diversified. You got base metals. You got some consumer discretionary. You got some staples.
Yeah.
Kimmy doesn't discriminate. I like it.
No, and actually, STLD, Steel Dynamics, was a recommendation in the morning on the short side. And when I pulled it up, I could tell it was going to pull in. It was traded. I forget how illiquid it is in the morning. And that's when you kind of would have been a great short. It was up at 103. It was only like 70,000 shares. And I said, listen, guys, I can't recommend such an illiquid name as a short. But I said, guys, my more know if anyone want to take it, looks like a good opportunity down near the 100 level. And it did go there. One gentleman in the room did take it, which I'm happy. But it's hard. It's hard to say, hey, let's go put a short on at such an illiquid level. I forgot it trades liquid as the day goes on, but so illiquid in the morning. So I didn't.
Yeah, we were actually, before you came on, Spencer and I were talking about sort of those morning trades and the morning action. By definition, it's pre-market. So generally speaking, unless there's an earnings event or a major event pre-market, there's not going to be a ton of liquidity. And in a name that specifically doesn't have a lot of liquidity, you're going to get even less. So on a short, you really need to be careful. This is a great point you're bringing up, Kimmy.
Yeah. And Procter & Gamble finally broke out of a little base. I'm watching Moderna. You were talking about healthcare. We traded it last week twice, Moderna. I went in it twice, I think the same day or within 2 days last week. It's stuck under this 127, 128 area. You can look at the base of the chart. I think you had up XLV before. So it's stuck. So I'm trying to see. I think it reports. I forget soon. But so I'm going to watch out for that. But also let's see if it pushes through. Could get past this level and head to like 130 or so.
Yeah, Kimmy, that's the
Oh, I
problem.
know.
That's the problem with this time of year is everybody reports soon, right?
I know.
So,
Yeah, this is the worst, and it's such a tough week. We have the Fed this week, and then we also have like big tech earnings.
What week do we not have the Fed? I feel like
and Moderna is August 3rd after
August.
the.
Yeah, yeah,
No,
yeah.
I'm
I knew
sorry,
it was August. I was
August
like, is
3rd.
it tomorrow or whatever?
Pre-market August 3rd. That's next
hold
Thursday.
on. Can we talk about, Kimmy, what you got on your mind today? You got a $72 billion semiconductor stock, Micron, there on slide 1. Spencer, why don't you throw that up there?
Yep.
I like where your head is at on this one, Kimmy. I like where your head is at.
It's stuck. It's really stuck under, the 65, 70 level or so. It kind of popped above it Friday, but Friday option expiration, I just let it go, whatever it may be. It did move, but trying to see if it gets going, otherwise they'll fail. So that's the risk you take. Either a trade is gonna work or not gonna work, and that's where you put a stop in if it's not gonna work. So I'm gonna see if it could break through like 65, 70 or 80 or so, and could really push up a buck or so. That's what I'm going to watch and see.
It's a really interesting level in the 64, 65
I mean, it could
area.
completely reverse and fail and not go and head back down, and that's the name of the game.
That's okay. That's not our problem.
All right, guys. Kimmy runs a live trading room every single day where she is live trading through the open and into the day. When she's calling out her trades as she makes them and dropping ideas in the chat, even trades she's not making. Right, she's calling them out too. So if you want to get into that room, it is not free. If you want to join, you can click the link in the description. You can click the link in the chat, or if that doesn't work, if clicking is too hard, you'd rather scan. You can scan the QR code on the screen right now. Those
How
three
is
things.
scanning easier than
I
clicking?
don't know. I'm just diversifying. I'm saying maybe clicking.
Diversifying.
Maybe you don't have a mouse. I don't know. I have no idea.
You don't have a mouse. You probably shouldn't be day trading, first of all.
Yeah, that's true. Actually, that's a good point.
No, I need a mouse.
Get a mouse first, then day trade.
All right. See you, Kimmy.
Later, Kimmy. Keep up the good work. She's crushing it, dude.
All
right. We probably need to at least talk about AMC for a second here, if only because they had a very interesting thing happen to them on Friday. Maybe on any other day, you could say AMC, the great weekend at the box office. Barbie, Oppenheimer, 4th biggest weekend for box office revenue in North American movie history. That's a fun fact. Actually, the largest, but best weekend for the box office that did not have a Star Wars, Marvel, or Jurassic Park movie. So anyway, but that's not why the stock is moving here today and on Friday. On Friday after the close, or like right at the close, a decision came down that this whole complicated merger thing with AMC and then their ape shares, a judge had put the kibosh on that. So if you follow the story, it's a rather creative fundraising idea that AMC had. They were not allowed to issue any more shares.
I can't imagine why.
Right. So what they do? They issued new shares called apes, AMC preferred equity units, right? And the idea was eventually they would just convert the apes into AMC shares. And in doing so, raise a bunch of money for the company. I think it was like $100 million. And also, obviously, dilute the AMC shareholders. Well, a judge said, no, on Friday, no, you can't do that. So the AMC shares went up 100% instantly. They're way off that now. I think they went from 4 to 8. And right now they're down to 6. The apes, as you would expect, collapsed on that, though they've come back to where they were on Friday. So anyway, I forget who said on Twitter, but I like how they described it. A bit of a lose-lose situation for an AMC shareholder here, because either the conversion got approved, right, and you get diluted all to hell, or it gets rejected as it did, and you don't get diluted, but AMC, remember, they did this to raise money. They still need to raise money. That's the whole point of this exercise, right? So now they have to find a new way to go and raise money to save their business. It's not going to be through an ape conversion, or maybe it will if they can somehow amend the conversion somehow. I'm not sure, but anyway, AMC the stock went from 4 to 8. Now it's down below 6 this morning. So you'll see it up, on all your pre-market scanners. Up 50%, up 40%. Well, in reality, it's down since $4.15 on Friday.
Yeah, still up 30% here pre-market. It's not nothing.
But again, that doesn't tell the whole story. The real story to me is that it's actually down. It's really been trading down since the initial pop. It's been trading down, so giving back more than half its gains already. That to me tells the whole story. Anyway, I don't know what.
Interesting. It's interesting.
Yeah.
I like how they call it APE. I like how they like went out of their way to come up with like an acronym to be able to say APE, right? Like only in 2023.
They have sold so many shares in the last 3 years. They sold so many shares that their charter said you can't sell shares anymore. They literally said you can't sell any more shares. That's why they had to do this. So crazy stuff. I don't know what's next, but AMC, I don't know. I mean, I guess short term good news, but long term they still need to raise money. So I guess not good news. I don't know. This whole thing is wild to me.
I mean, listen, if you own AMC, are you really doing it because you think the company's so great and because movie theaters are going to be the next big thing? No, it's a meme stock.
No. If you're still owning AMC, it's because you honestly believe that. I think you honestly believe that the movies are or the business is going to come back in some way, shape, or form.
Yeah, I got real estate on some planet to sell you.
Yeah.
Can you throw up there slide 1? I want to look at the new 1 month lows for Bitcoin. New 1 month lows there for Bitcoin. That's usually not a good sign when a healthy consolidation.
This
like
thing was. I was about to buy more. A couple of weeks ago, we talked about that breakout. It was right there. I almost pulled the trigger. I didn't, but man, it looked like it was going to go.
Yep, new 30-day lows for Bitcoin. Not what you want to see. Looking for a breakout. I'm happy to see it. I hope it goes to 0. I don't own any of it. I got rid of all of mine a couple of weeks ago, as we documented here on the show. Didn't feel right. Failed 4 weeks in a row above 31. That was enough for me. I had some nice gains in Marathon. I said, you know what? I don't need this aggravation in my life. I'd rather be bougie and pay more for a nicer hotel, a fancier hotel that I know is going to be more expensive, and I'm going to have a better experience. That's sort of how I looked at Bitcoin. And this is the better experience that I'm having, Spencer. See, if I would have been a cheapskate and tried to anticipate a breakout, I would be suffering the consequences of getting whipped around, and that's no good. I'd be more, and this is a good lesson, because here we are talking about whether I should buy more healthcare or I should buy more energy. And a lot of investors and I've been there myself, so I'm not like saying how like I'm so special or anything. I've been there, which is why I can speak to it. When you're more worried about the investment that you're losing money on, and you're getting aggravated by something that's costing you money, you're going to be so focused on that you're going to miss the giant elephant walking right in front of you, right? And it helps take your eye off the ball. And this is just a great example. I know it sounds easy for me to say because I'm on the right side of this situation, but I'm only saying it because I've been on the wrong side of this situation 1,000 times, or maybe more, actually. And I've literally missed the giant elephant walking right past me. So this is just a great example. Great lesson, guys. If you're listening out there, I'm telling you, I'm speaking from the heart. And if it's not this, it's something else that you might be in that's causing you aggravation, and it's making you less focused on finding new opportunities, and you're missing new opportunities because you're focused on some crap that you own that's not working. Know that feeling, understand that feeling, because you can't see it in my eyes. I've had that feeling plenty, and it's very frustrating. So it's nice for once in my life to be on the other side of the coin. But I wanted to share some of that wisdom, is what we like to call it, because when you learn the best lessons, you got to learn the hard way, Spencer. Got to learn the hard way.
It's true. It's sometimes the best trades you make are the ones you lose money.
That's right.
Or they're the trades you don't make at all. All right, let's do a hot corner real quick. It is 9:30. Everyone, they're off to the races. Let's look at the hot corner today. Any good transactions? I didn't see too much. Let's take a look.
Hot corner. So hot right now.
Yeah, quiet day for the hot corner here. We're spinning the table up. Oh, come on.
Yeah, quiet day for you, maybe. But this SAFT, this is $1 billion insurance stock, property and casualty. Form 4 filing, $2 million.
All right, yeah. Okay, smaller stock, but a big
Is
transaction.
that
Yeah.
not good enough for you, Spencer? Are you not entertained? Now, this thing doesn't trade, though. That's the problem. This thing's super illiquid. So just kind of bear that in mind. Down near support. Listen, it's not terrible, guys. It's not terrible. $2 million worth of stock in a purchase in a Form 4 filing down near support. It's not liquid. It's not that liquid. So you just got to really be careful with that. If you have a small trading account or something like that, and you could position yourself in something like this, knock yourself out. If you're looking for options liquidity, you ain't gonna find it here. If you're looking for size, if you manage a large family office or you're a hedge fund trader, something like that, you can't touch it. But if you're this is a great example of individual investors. You hear all the time how individual investors are at a disadvantage over institutions. It's actually the exact opposite. Individual investors are at a huge advantage over institutions, and this is just a good example. Institutions can't touch this. Individual investors can.
Question from Ryan: what did you use to determine liquidity on SAF? Did you use IV or do you look at open? You mentioned
the average volume 68,000 shares.
Right. But you just mentioned the options, so I was wondering. I guess he was wondering, maybe did you look at the open interest real fast?
I actually just assumed they didn't even trade options. They do trade options, but there's just no liquidity. I mean, look at the open interest in these things. The open interest one contract.
That's what I was implying.
Yeah. There's nothing there.
Yeah. All right. Yeah. All right, guys. The Hot Corner is a daily note that goes out every single day, highlighting the biggest trades from Washington to Wall Street to the boardrooms themselves. If you want in on this action, email us questions@stockmarketmedia.com. Let's also get to our other free daily note right now, the chart report. Let's bring up Friday's edition of the report. I have it here.
I like that you're starting out with the chart of the day here. Michael Naus, friend of the show. He's here all the time. Has been a guest before. We should have him on again soon, actually. Yep. I was looking at the same thing, man. You saw this consolidation, and it broke down, and we're right back to the scene of the crime. That looks like trouble to me. What's that song? We don't need no more trouble. No more trouble. You know that song? We don't need no more trouble.
I can't say I do. Although I have a very poor music.
You guys need to listen to reggae in New Jersey. Too busy pumping
I
your
have
fists.
Very poor music catalog in my head. I can't. I'd be all for it, music trivia.
To be fair, I did a terrible job of singing Bob Marley there also. So there's that, right?
Yep. Okay, I want to scroll down actually to this chart here from Spy Jared. This is the one. So the Dow is up 10 days in a row. We know this, yes? What happens after that? What does the Dow usually do when it has a 10-day winning streak? Well, with a couple of outliers there, 1929, 1973, 1959, it's usually up a year later. In fact, it's usually up a quarter later. It's usually up. That's the takeaway here. 10-day winning streak. Winning begets more winning.
I'll tell you this. I generally think stuff like this is stupid.
You do?
I do.
Why?
But I want to just zoom out on this. Yeah, this data mining stuff is silly. I like T-Core there talking about how Mr. Israel needs to learn who Bob Marley is. He's kind of a big deal.
I know who Bob Marley is. I mean, I know his music. I just
he's not from New Jersey.
I couldn't tell you.
So it doesn't really matter. It doesn't. This data mining stuff is not for me. But what I think does reiterate as a point that we make quite a bit is relentless buying, just unprecedented, just consistent bid, and that tends to occur earlier in cycles, not end of cycles. So although I'm not a huge fan of data mining like this. I do like Jared. Jared's good egg. Taller than you would think also. But I don't like the data mining and all that stuff. But that does reiterate that when you see relentless buying and that relentless bid, again, You don't usually see that at the end of cycles. You tend to see it in the earlier stages. And in that point, in that respect, I do think it adds some value.
I just like knowing. I like knowing what usually has come next, even though it may not apply to today, because even as I'll get the chart back up here, as the table itself showed, history itself says the Dow has been down 36%, in the year after a 10-day winning streak, right? So everything's on the table. I just like knowing what's happened. You know what I mean?
Yeah, I don't really care. I think it's bullshit. I
Okay.
think it's all bullshit.
All right.
I'm more interested in the fact that we've gotten a relentless bid. That's just me and my experience. But I do have one more that I wanted to show here, and that is Ryan Dietrich, also a friend of the show, talking about the breakout that we are seeing in bank stocks. This is a chart that we've shown here before. Ryan Dietrich, good friend of ours, good egg. Cincinnati Bengals fan. He's the only Cincinnati Bengals.
Wait a minute. Ryan Dietrich usually does those kinds of things. The data mining 1 year later. That's like his thing.
That's fine. He's welcome to do that. I think it's all bullshit.
Okay.
Yeah, that's okay.
Okay.
Listen, I love Ryan Dietrich.
Yeah.
I'll make fun of him to his face. I have. I will again.
Yep.
Yeah.
All right, guys. Anyway, if you don't want to spend all day on the app formerly known as Twitter, you don't have to. That's why the chart report exists. It's compiled every single day by one Patrick Donawilla, and he mines Twitter, X, whatever we're calling it now, for the best charts, and he puts them in a free daily note. And to get that daily note, you can scan the link, the QR code on the screen, click on the link in the description, and it goes out every day, Monday through Friday in the evenings, and it's a great read. It's a great read. You don't have to spend all day on Twitter to get the best of Twitter. Okay, just an FYI, everyone. It's been alerted to me that AMC shares halted right off the open, halted to the downside, I should say. That's important context. Halted to the downside right off the open here. So major volatility in AMC here this morning. The stock went from $4 to $8.80 at in the 4:15 p.m. candle on Friday. Now down to it hit 5 already this morning. Wow, hit 5:01. Anyway, they've since resumed. I think they just came out of the halt. Yeah, they're out of the halt now. So just keep an eye on that if you are getting down and dirty in AMC here. Okay,
and if you're trading this AMC, and you're not a day trader on a regular basis, and you just happen to be trading, you should check yourself a little bit. Maybe look in the mirror and ask yourself, what the hell are you doing? Right? If you are a day trader and this is the type of action that you're looking for, that's one thing. But if you're not, and this is what you're trading, look at yourself in the mirror.
Yep. By the way, we had the NASDAQ rebalance on Friday. If you're interested in what that means from a market dynamic standpoint, just go back to Friday and look at the closing candles there in Apple and Microsoft, NVIDIA, I guess like Google. It just all it means is there is some volatile. There some larger wicks on Friday heading into the close. Just an abnormally high amount of volume. A lot of a bit wider ranges as everybody tried to reshuffle, get in, get out as relates to the NASDAQ 100. So that's over with now. That trade is done. It was more of just an interesting thing to happen, but not much unless you are in there at 3:55 trading those things for 5 minutes. Not much really to take away other than it's interesting to observe how that change plays out in the market. But that's over with now. JC, what's your take on Bank of America? Do you have one? This is from Mark.
Yeah, my take is that it's an underperformer, and if I'm going to be in banks, I want to be in the leaders. And I put my money where my mouth is. I own HSBC. HSBC's already been making new 52-week highs. So why am I gonna be in the garbage when I can own the leadership? My HSBC continues to work very, very well for me. I'm sticking with that. That's my financials exposure. I don't necessarily think that everybody needs financial exposure. I don't necessarily think that you always need to have exposure to financials. But in this environment, when I'm seeing when I got journalists telling me we're in a banking crisis and HSBC is making new 52-week highs, I say,
I think the narrative on the banking crisis has set sail. I think now that we're through the bank earnings, especially bank earnings season, and they all basically came in pretty okay. I think the consensus seems to be that if there is going to be a long-term ramification of the events of March and April, it is that there's going to be far fewer smaller and mid-sized banks in this country, and the big banks will just keep buying smaller
good.
banks.
Who cares?
Right?
Like these little banks that no one's ever heard of, like Pac West or whatever, West Pac or whatever it was called. Like who cares?
The idea of a community bank is frankly so quaint anyway. Does anybody even use? I mean, raise your hand in the chat if you use a community bank. I mean, I haven't. I had an account at a community bank when I was literally when I was a child. My dad opened me an account, like a young savers account. I was like in second grade. That was the last time I used a community bank, right?
The interest rates were through the roof.
Well, yeah. All the way back then, they were still at zero. Fun fact.
Dude, they should take all these community banks and they should turn them into like pizza places, like good pizza places, not like that Domino's cardboard crap. Like
Right.
good pizza places,
Yeah.
good bagels. You know, like
Yeah.
we're spoiled out here in the Northeast. Good bagels, good pizza. The rest of the country doesn't know.
I'm actually remembering now my account. My dad funded my account with $200 in second grade, and every year I would get this statement. I had a little. It was a booklet. They would stamp my New Balance, and the interest was like just astounded me. I was like, I guess it was supposed to like inspire me to save money, but it had the opposite effect because it never grew, right? So like it had the opposite effect. I was like, well, what am I doing here? Why am I making 10 cents a year or whatever I was making, right? It was stupid. Anyway,
Great point from the chat about the 5% dividend being paid that HSBC is paying. For the record, that is not why I own it, but yes, it's true. If you are looking for a dividend and wanted some financial exposure, HSBC. And listen, it's doing great now, but that shouldn't be a surprise because it was doing great when the journalists were telling you we were in a banking crisis. So there was already something odd happening there, and it got our attention, and implied volatility was like stupid cheap. I remember being in a meeting with Sean. This is before the boys left to Asia, of course. And I remember being in a meeting. I'm like, I think the stock was like a 38 and a half, and we were buying the 40 calls for $2. I'm like, really? I'm going all the way out to January? I'm like, really? And Sean's like, yeah. And I was like, all right, let's go. Flip the book.
Yep. All right, guys. The guys are coming back from Asia here in a couple of days. They are officially on the last leg of their journey.
You know what they're doing right now?
They're
Do you know?
They're in Tokyo.
Do you know what they're doing in Tokyo right now?
I know what they're doing in Tokyo. Well, they're like what, 12 hours ahead?
They're doing a Wagyu omakase.
You're gonna have to elaborate.
Well, you know omakase.
Just speak English.
You never had an omakase?
No.
Oh my God, Spencer. You and I need to have a sit down, my friend. I'm actually doing omakase with Tom Lee on Thursday, as a matter of fact. Omakase is when you just sit down at the bar and they just give you fish until you tell them to stop.
I've never done that.
Like 20 different pieces of fish. They just keep giving you one little piece of fish until you tell them to stop. And every time they give you another piece of fish, that's the last time you're going to have that fish. Unless you specifically ask, you revisit. Like at the end of the omakase, you're like, oh, can I get that uni one more time? Can I get one more of that fluke? That fluke was really good. I'll have one more of those. That's how I roll anyway. Omakase is one of the greatest things in the whole world. They're doing a Wagyu omakase. So they're tasting all different kinds of beef. I've never done a Wagyu omakase. I've done omakase that ends with Wagyu, but I've never done.
Sounds amazing. That sounds incredible.
So that's what. While we're working here, us schleps here working.
Yeah.
If you call this work, I call this talking through ideas, having a good time. But that's what these guys. And you know what they're gonna do tomorrow? They're gonna be racing go-karts through Tokyo, dressed as Mario Brothers characters.
Tokyo Drift style? Oh, Mario Kart style. Okay.
Yeah.
Oh, that's a
because in Tokyo, like in Japan, they just like to dress up a lot. Like when you go to Disney World in Tokyo, like everybody's dressed up, and it's like Halloween all year.
Yeah.
So they, they're gonna dress up as like Mario and Luigi and Yoshi and everybody, and they're just gonna race around. And not just those. You can dress up as like Spider-Man if you want.
Sure. Nasdaq Poppy says I need more culture. Hey, maybe I do. Maybe I do. No arguments there. I will not say no to more culture. Wait, JC, I just lost your audio. I lost your mic there. Just check yourself. Real fast. The reason I brought that up though was just because the guys are on the last leg of their journey, which means they're coming back this week. Okay, and the reason they were there in the first place was because we're doing a documentary. They've been gone now for basically 3 weeks. These guys have been in Asia. Giancarlo, Straza, Sean. We are doing a documentary called Wall Street to All Streets, which has been gratefully supported by Centerpoint. And the whole point of this was we wanted to go across the world, across the globe, and find out if people in Asia traded or invested with the same mindset or in a different way than we do here in the States. So that's the whole impetus there. These guys have been across Asia. They've been to Singapore, Kuala Lumpur, Ho Chi Minh City in Vietnam, Bangkok, Manila. They did not go to Taipei, Hong Kong, Tokyo. And we are going to come back and turn all of this into a documentary series. It's going to be episodic, not one movie. It'll be different episodes, one episode per each city. It's going to be fantastic. If you want early access and if you want to attend screenings of it online with us, we're going to be hosting online and watch parties. I recommend you sign up to get alerted and join the list there. The link is at the top of the chat. It's pinned there on the YouTube chat. It's also at the top of the description on YouTube. The URL, I'll put that on the URL on the screen right now. It's there's the QR code to scan if you want. And again, this is probably gonna come out sometime. Well, what are we in now? We're in Q3. It's the end of July. I don't know. I don't want to give you any hard dates, but maybe September-ish is when we'll premiere the first episode. We got a lot of footage to go through, so it's going to be fantastic. These guys, like I said, have been there for 3 weeks, and it's going to be awesome. So again, Wall Street's All Streets. Get early access. Come hang out with us for the watch parties. It's going to be amazing. I don't know what else to say.
Yeah, I'm really excited. I talk to these guys every day. They're having the time of their lives. They don't want to come back. Straza this morning's like, I love Tokyo, but I miss Vietnam. I'm like, really?
He's still on the Vietnam train.
He's still on the Vietnam train. But
right.
He's like, he was very excited about the meal they were going to. They're like, GC, I don't know if this is going to be in the budget. It's a little expensive. I'm like, just go. Have fun. Enjoy it.
I shudder. I shudder at how much money has been spent. Well, I guess Tokyo would be the worst of it, right?
It'll be worth it. I mean, think about the amount of knowledge out there that we're bringing to the American investor in North America that's never had the opportunity to visit these countries. The only reason, and let's remember, the only reason that they're out there, Riley, Sean, Giancarlo, Straza, the reason they're out there is because I've been to most of these places, and I learned a ton throughout those experiences that helped me to this day. Like every day of my life, those experiences in Asia and Europe for that matter, but I feel like more extreme in Asia, continue to help me. Because when you're in Europe, it's like, they're speaking a different language. The real estate is the architecture's older, but it's not that different. When you're in Tokyo, you're in Mars. I mean, it's just another planet,
It's Mars. All right.
In a good way, in a great way, in every great way possible.
The last time I was in Asia, I was 2 years old, so I definitely need to go back and experience it as a normal human being. By the way, thank you so much to Centerpoint for helping to make this trip happen. If you guys, if you scan the QR code on the screen, that'll take you to our page on Centerpoint. If you create an account through us, you'll get no commissions for 60 days. It is a fantastic play. If you're an active trader, there's probably no better platform for you. It's got amazing order execution and routing tools. It's got a fantastic short locate.
You get the DAWs for free. Like, so even if you're not a professional trader, like Spencer's like, oh, the commissions, forget the commissions. I mean, yes, you're basically trading for free, which is fantastic, but you're getting DAWs for free. So even if you're not a professional institutional hedge fund manager, trader, you're trading in the same system that they're trading on. Like, you have access to all of these tools and you get it for free using this link. You don't necessarily get it just opening an account there, but use this link. Trust me, this thing is sick. I mean, it's for all level 2. You get everything you need.
Yep. Again, fantastic. And the thing they're known for is their order routing and their short locate list, right? That's the thing. If you have tried to short a stock and can't find any, sorry, got nothing
True.
for you. That's not going to happen
And
here.
it's really annoying when you're trying to borrow something and you can't short it,
Yeah.
and you know it's going to go down and you can't short it. Then you got to go to the options market, and it's like this whole thing. Super annoying. I've been there. They're really good, and their customer service is awesome. I can't say that about other brokerages. Their customer service is right, because I'm like dumb. With this sort of thing, I'm terrible, and they have held my hand whenever I've needed them to, and for that I will forever be grateful. So I encourage you guys, check it out.
Yeah, that's actually the other thing they're known for is their support. Okay, what else here? It's 9:51. What else was on my list to discuss? We talked about AMC. We talked about that. Did we have any interesting movers off the opening bell?
Recess.
Yeah, we can do some recess here. I'm just doing a quick scan at the scanner. What's up? What's down? Why is Weight Watchers WW up almost 10% here this morning?
Oh, they got upgraded to overweight.
Oh,
I love it when that happens.
Not even funny. Actually, it is funny.
I love it when that happens.
God damn it! I hate that I laughed at that joke. All right, let's do some recess. God damn it! I'm better. You're better than that, Spencer. You're better than that. All right, where's my recess bumper? Let's go. Come on. There we go.
All right, Spencer, how was the weekend? What do you got?
What do I got? I got a couple things. Okay. A few weeks ago, you had a moral question, right? Moral dilemma, right? With the wine. I've got one here this morning. So I went out to eat on Friday night, went to this little Greek place. I was up in the mountains, in the Catskill Mountains. It was great. I got an email from my bank yesterday that I didn't see until this morning. And the email said, I'll bring it up here. Did you mean to leave a tip this large? So apparently I misread the receipt or I screwed something up and I left 119% tip. It was a very small check. It was not an expensive place, not high end at all. But I left 119% tip. And the email said, if this is wrong, contact the vendor, contact the merchant, right? Now, it was a very small check. The check itself was like $50. So, I basically left a $55 tip or whatever on a $50 check. My question is, do I call the restaurant and say that was a mistake? Or do I just forget it and accept that I left someone a very large?
What'd you do? Why'd you do
I must have. You know why? Because they had, rather than write in the tip, it had you could check off. They had options. You just check one. And I think I just checked it. And I don't know what I did. I have no idea what I did. Honestly, I really don't know. So yeah, obviously I messed up. Yes, of course I did. The question is, do I call them and tell them that was a mistake, or do I just say whatever? Right? It's $50. Was the bank SoFi? Actually, I guess it was from my credit card. Is who it was. So the email came from Capital One, I think.
I've got my.
What would you do?
I mean, I'm not going to sit there and call for $50. Whatever. I'm an idiot.
Right.
I ate it. I'll eat it.
All right. Yeah. All right. Okay. And the email was from Capital One. Yep. Okay. You eat it. All right. It was. Yeah. The tip was $48. On a $41 bill. So yeah, I'll eat it.
Good on your credit card company for calling that out, though.
Hey, yeah. Thanks, Capital One.
Yeah.
Didn't know I did that. I had no idea. But other than that, over the weekend, I did something I haven't done in a long time. You see, I played some softball.
Wow.
I haven't played softball in probably, I don't know, couldn't even tell you.
Were you the captain of your high school softball team, Spencer?
What God knows. They stuck me in right field, as one does. But I did go 2 for 4 with 3 RBIs.
Wow.
And we only scored 7 runs. So I had almost half our RBIs. So I had a pretty good day. Not in the field, but at least at the plate, I had a pretty good day. And that was my weekend. What about yours?
I had my daughter's 3rd birthday party. We had princesses come. So Elsa, Anna, and Sleeping Beauty were at the party. And it was, honestly, with all these crazy 2, 3, 4-year-olds, the princesses got all their attention. They were sitting there reading them stories for like an hour while all the parents were in the back drinking beers. I was actually very impressed by the princesses. So shout out to the princesses at my daughter's 3rd birthday party. Yesterday, just hung out in the pool because it was hot as hell. But this time of year, you know, as we enter the month of August, I just like to give my annual sort of like, disclosure and, public service announcement to everybody who plays fantasy football. Because I know you got all kinds of drafts and everything coming in August. I just want to reiterate, like I do every year, nobody cares. Nobody cares about your fantasy football team. Nobody cares about who you didn't get in the 2nd round. Nobody cares about how good your team is. Nobody cares. They don't care on Twitter. Your friends and family don't care. So just keep it to yourself. If you play fantasy football, that's great. If you have 6 different fantasy football teams, great. Nobody cares.
Okay.
So just
keep
it to yourself. Nobody cares.
I'm with you. I'm a pretty hardcore player, but I am, unless I'm asked by someone, I will not share my team because, you're right. Because sometimes I don't even care, right? So, and I definitely don't care about your team, right? Unless I ask. So,
and nobody asks
I'm with you.
ever, right? This is volunteer for me.
No.
You should see my fantasy team. I don't.
Players will ask other players sometimes, but I'm not going to share.
I will pay you more to not have to see your fantasy team. Actually,
that's right. That's exactly right. Fantasy season is about a month away, so it's exciting times. Anyway, okay. Kimmy's been active this morning. Let's see. Kimmy already bought Micron. She bought Valero. She bought Procter and Gamble. She's probably out of some of those by now.
Yup, Valero ripping, man.
Really?
Oh yeah.
No, am I missing the energy trade already?
You are missing it. Yeah, I'm crushing it this morning.
Today is the day for me in some energy. So a little something. I'll figure it out.
Even though I'm here looking to add to position, so I'm not like thrilled that it's taken off on me. I'm thrilled because I own it. I'm gonna be adding to some positions. I like this.
All right.
Look at technology.
Right.
Q's again, down again as that money continues to rotate out of technology. Look at Marathon down 6.5%. I don't own any. Let it go to 0. Not my problem. Bitcoin getting
Marathon, not
yes.
NPC,
not
NPC.
Not NPC.
Okay.
Marathon.
Woo, you had me worried there for a second.
No. NPC is doing very well actually, and then MRO because you got NPC and then you got MRO.
What's the difference?
Both of them up. One of them is like the pipeline, and the other one's the company.
Oh. Okay.
Something like that. If Straza was here and not crushing omakase in Tokyo right now, which is what they're doing, he would go into this whole thing about how this company does that, and this is the same company, but this is the part that does this, and whatever.
All right. Oh well. Well, he'll. I think he'll be back on for Friday's show. I hope. We'll see. We'll see how exhausted they are. Anyway, that'll be a wrap for us today. Thanks to our guest, Andrew O'Connell. Thanks, as always, to Kimmy Sokoloff, and to all of you watching. If you are in the chat, we thank you for your participation. If you're not in the chat, that's okay too. You can watch without chatting. We're not going to make you chat. I would appreciate, though, if you hit the like button, because that does help us on YouTube. Just hit the little thumbs up. It takes 2 seconds. Not even. Here, I'll do it right now. Boom, I liked it. We're up to 40. Let's go up to 100. That'd be great. Thanks to our guests. Thanks to all of you. As far as the channel today, we do have some premium content going out to our members. If you have any questions about how to get said premium content, my best suggestion to you is to email us at questions@stockmarketmedia or call us. I'll put the number up on the screen. Where's the number up on the screen? 323-421-7910. Where's my number? There's my number. Call us. Talk to Mary. There's the number. You can always email us. It's in the description. And that way, maybe you want some content that we only give for our members, and that's how you'll know how to get it. So that's it for us today on the channel. Everyone go make some money. Have a good rest of your day. And we'll be back tomorrow morning for another edition of The Morning Show.
Adios.
Have a good day. Have a good day, everyone.
Run it. I can't take no loss. I don't need no